The numbers are in for the May 2025 North Alabama real estate market update. Let's jump into a few key takeaways and then we'll dive into all of the nitty gritty in terms of the details. First, in general, the market remains relatively flat year over year in terms of new listings, pending sales, closed sales, and even affordability. However, with Fannie Mae projecting interest rates in the fives, like really high 5 range by late 2026, and housing supply starting to rebound, buyers may be facing the most favorable conditions that they'll see for years. The other big story is inventory and supply. It's up 22% and 18.9% year over year, respectively, now at healthy levels. However, if inventory continues growing at this 20+% rate, we could tip into a buyer's market. But again, however, with these declining rates that are being projected, that's going to likely reignite demand before that shift occurs. Let's jump into the individual submarkets. First up is Huntsville. The median sales price was pretty much flat, down $2,000, $340 versus $338. Really, the homes sold, again, the key theme is everything is staying flat. The home sold was a 2.7% increase, 723 versus 743. The big thing, like really all the submarkets, is the increase in the number of homes, a 26.4% increase in homes, 2,167 versus 2,740 on the market right now. So a lot of inventory available in the marketplace before that demand kicks back in with potentially lower interest rates. The Athens market is typically kind of volatile month to month in terms of median sales price and average sales price. It's just a smaller market, so those numbers jump up and down. And May was no different. The median sales price was down $16,000, $310 versus $326. I don't think that's a trend that you should really worry about unless we see that for the next couple of months. Home sales have really stayed flat, 224 versus 228, but an increase in the number of homes on the market, 1,008 versus 792. That's a 27% increase. If that trend continues, of course, that will affect values in Athens. But again, I think that demand is going to increase once these interest rates start coming back down. So Morgan County is relatively flat. Median sales price was down $6,000, 250 to 244, as a lot of people flocked to Morgan County for affordability, but it actually got more affordable year over year. The homes sold scenario is about the same, 143 versus 150, so a few more homes sold this time versus last year. The big story in Morgan County is the increase in the number of homes on the market. A lot more homes to choose from, 587 versus 367. That's almost a 60% increase in the Morgan County area. If that trend continues, that will continue to drive down prices. But again, I think we'll see lower interest rates and increased demand, especially for a more affordable area like Morgan County before that happens. So getting into the details of each individual stat, new listings flat year over year, really down 1.7%. We're at 1,657 listings. That is pre-pandemic numbers. That is a more healthy market. Year to date, we are actually up 9.7%. So we have more supply. We have over 7,700 listings that have come available in the North Alabama market this year. Pending sales is flat. It's a 0% change, 1133 this time last year and in May 2025 as well. Year to date, we are actually up 1.9%, 5,573. That is a strong number when you compare it to the rest of the national market. Closed sales were up 2.8% year over year and up 3.3%. So over 5,000 sales closed this year, up 3.3%. The reason that's a big deal is the national picture is down 2%. So if you take the difference between negative 2% and an increase in our market at 3.3%, the Huntsville market, the safe haven of Huntsville and just the desirability of this area, outperformed the market by 5.3%. That's what whenever you invest in the stock market or anything else, you're always wanting to outpace the market, and that's exactly what Huntsville is doing, and it does that year after year. And so Huntsville continues to be an area to invest in and to grow, not only in these down markets, but also as we look in the future as potential new jobs are coming to the area. With more inventory on the market and demand staying relatively flat, days on market, it has increased year over year. We're up to 59 days. That is an increase, versus last year, a 28.3% increase, which is what you would expect. We have more supply out there. as demand stays flat, supply comes up, you're gonna have more days on market. So sellers are gonna have to be more patient, and buyers are having a little bit more time for the average home to be able to kind of make that buying selection, which again is a healthy market. We're coming up into really the third year of this business cycle. Typically market cycles, you have 3 to 5 years, and we're in that third year where home sales look like they're going to come in at about 4 million homes, which is the kind of the base for home sales across the US, because you're always having people move due to diplomas and diapers and the unfortunate things about moving, divorces and deaths as well. That creates kind of the floor of 4 million home sales. That's where we've been, likely going to come out of it, as Fannie Mae is predicting, with high 5% interest rates in 2026. 3 to 5 year cycle is what you typically see. A normal market is about 5 million homes sold. So that's likely where we're headed into 2026, 2027. A booming market is what we saw in COVID, which is 6 million plus home sales. All right, let's jump into pricing. The median sales price, $315,000. That's pretty much flat, down 1.5% year over year. Average sales price up 0.3%, up 1.1% year over year. $359,000, almost $360,000 for the average price in Huntsville. I remember pre-pandemic, just like it was yesterday, average sales price, in that kind of high 100s, 180 type range. So we have doubled prices over the last few years here in the Huntsville market, which really is astonishing with everything that's hit the real estate market. Prices doubling, interest rates rising, all the global conflict, everything that's going on in the world has not really impacted prices. We've still stayed flat. So for all of those naysayers that are saying real estate's going to crash, we've been hit with everything. And so likely we're only going to see prices go up from here as you see more favorable interest rates and you see more inflation. I truly believe between now and the end of next year is going to be the best buying opportunity that we'll see in years to come. And the closer you get to the end of next year, I think the more challenging the market's going to be for buyers. The percent of list price is relatively flat, coming in at 97.9% year to date, 98.2% in May, down 0.3%. Typically, I like to see that number around 97%. I really think if our numbers weren't skewed with new construction, you have a builder that sells a home at list price but pays $20,000 in interest rate concessions, that shows up as percent list price as 100%. So I think that's skewing the market. I think we're really probably a little bit south of that 97% right now. But again, kind of a healthy market. There's some negotiation room for buyers, and homes are still moving. The Housing Affordability Index, that's something that we want to continue to keep an eye on. We were way north of 100, meaning the median household income could easily afford the median price range home. We're south of that now, 91 in May. Year to date, we're about 94. As rates come down, that should help with that and push that back up closer to 100. Prices will likely go up as well, but we want to keep that number as close as possible because you want your teachers and your nurses and your police officers to be able to work and live in the same town. If they have to make too far of a commute, that is bad for the city. And so we want to see those numbers up closer to 100. We are much, much better than a lot of comparison cities, but I don't really like seeing that number around 90. Now, inventory is still a big thing to be looking at. 4,500 homes for sale in May 2025. That's a percent increase of 22% year over year. Month supply, we're at 4.4 months worth of supply. That's technically considered a balanced market. Certainly doesn't feel like it. Feels like a little bit of a buyer's market. Inventory continues to increase at that level. We will enter into a strong buyer's market where prices actually would likely come down slightly. I don't think we're going to see that. I think we're going to see the Fed act, and we're going to start to see interest rates come down before that and create this more balanced market, and probably eventually into a seller's market again towards the end of next year as interest rates hit into the 5s. So if you're thinking about taking advantage of this market in terms of a seller or a buyer, we've put some links below, pinned them to the top, where you can schedule a free consultation with us or also get a free home valuation to see what your home might be worth in this market.